Hi there. I'm just going to go over some of the trading signals for today. It's almost 2 p.m. my time in Cape Town, South Africa, and yeah, we'll just go over some of the stuff that I spoke about yesterday and how it's carried through into today. So here we're looking at WTI oil, and let's just take this out a bit here. You can see these lines. This line here. These vertical lines over here, that's 1 day, and the charts that I'm using are Renko charts. For those of you that don't know what Renko charts are, it's purely based on price action. So when a certain amount of depends which type of Renko chart you're using. So these are a type of mean Renko chart, and when a certain amount of pips are realized, then a new brick, what they call a brick, is formed. So you can see here all these bricks as such are one movement or one series of a certain amount of pips that have moved within that that period. So whether it's got nothing to do with time, but essentially what happens is, as there's price action, it prints a new brick and a new brick. So if, for instance, there's a big spike, you'll see that a lot of bricks are printed in a quick succession. And the way that you can read this is, if you look at on the bottom here, this blue histogram, where there's very little spaces in between, is basically showing you that there's very quick movement. Where it's quite packed together and dark, showing you that the amount of time spent on that bar was long, so there's not much movement as such. So you can see what happened here yesterday. We saw a lot of movement coming through quite quickly from about 4 p.m. my time. You can see there through to about 5:30. So a lot of movement coming through within this period over here, just when the market was opening, and that was about, if you'd use this as your take profit, the R2 level, where you could see it was bouncing around there, and then it session closed off over here. That would have been about nearly 2 hours from this open here, and you'd be looking at, that's about a 90 point move, which is about $900 on one contract. Anyway, you can see here at the bottom we've got lots of green volume, the volume that's coming through. This gives me a very good idea of which side the market is looking to place their orders, or the orders that are going to move the market as such. So you can see from this point here, market started moving up, bit of sideways price action, and then it continued. And you can see into today, you would have been looking at going long almost immediately. Then the London session came in, you would have looked at going long again. The market's just basically been bouncing around this R1 level before then heading up, going through the R2 level, and possibly heading for R3 and above. So you can see from the buy signal that was given, say, from here yesterday, if you hadn't taken any profits along the way, you'd still be long for around about 130 odd points, which is $1,300. Okay, let's have a quick look here at the NQ. Nice move up this morning. Let's go back a bit here. You can see yesterday market came down, hit this pivot, and sorry, that's today. Market came down. You can see how it bounced directly off. Now these lines that you see here aren't drawn in after the fact. When the session starts, these lines are then printed. So this pivot line over here was drawn as soon as the market opened over there. It's based on the previous day's price action. So these are different from the normal pivot points with resistance and support. These are based on Fibonacci ratios. So you see what happened is market, this would have been giving you from yesterday, would have set the biases towards the downside. There's selling pressure, and you would have got in here for a sell, an exit around here for around 30 points, then a buy here. Here's the volume there, and that would have given you a loss there for about another 10-12 points. So you'd be sitting with call it 30 minus 12, that's 18, and then another long here would have given you another loss. You'd be up about maybe about 10 points, 8 points. Another short here, so we into a bit of a whipsaw here, but that's all part of trading. So up 8 and minus, say, 14. So 8 minus 14, which is we're now 6 down. But then the nice move comes through over here. And this is always what happens. You'll take a couple of small losses, and then the big move shows itself. So you've just got to be consistent in the way that you trade. And there's, call it about a 40 pip move. So you're looking at, you'd be out of the trade now currently. So that would give you 34 points. So you'd be up on the Nasdaq, you'd be up nicely on oil, and let's have a look at gold. Gold also, nice downward pressure, but not much movement. See, bit of a whipsaw over here. And the trade you would have got today, that would have been the nice trade over here. That's for about 23 points. You'd probably be, I'll tell you now, there's 23, less, say, 7, so 23 less 7, 16. So you wouldn't have gone long because there's no confirmation here. You would have just taken the shorts, and that one over there, that's would be, you'd be about 15 points up, maybe about $150 up on gold. Yesterday, not much movement on gold. Anyway, that's the current situation. What I'm looking at is, depending on how the market opens, which that'll be from this purple line you see here, we could see a pullback. I don't know how strong the bullish move here looks quite good, but I think the market is quite overbought. So I would expect to see, my prediction is, there you see, that would be a sell. My prediction is that we're going to see in fact, my prediction is we're going to see a sell-off in the market over here on the Nasdaq, and then on oil. Yeah, this looks like it's continuing up very strong. I wouldn't be selling on the back of this. I'd be looking for longs. And yeah, possibly continuing up to at least this R3 level here. That's another 40 odd points. So lots of money to be made. Anyway, that's all for today, and we'll speak again tomorrow. Cheers. Bye.